Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for March 26th, 2018. Let's take a quick look at today's markets. Well, what a day it was. The equities soared today on news that U.S. and China trade talks are ongoing. So that put everyone sort of at ease over this potential trade war. And equities rallied and rallied hard. The Dow was up 669 points, while the S&P 500 was up a little over 70 points. The Nasdaq was up 227 points, while the Russell gained almost 34 points. We're going to come back to these charts in just a moment and have a look at what we might expect next from equities. TLT down slightly today. This caused the yield on the 10-year treasury note to bounce up to 2.844, while gold finished higher regardless of the dip in equities. Gold was up 290 at the official close, while crude finished slightly lower today, down about 40 cents or so. The US dollar was also lower today. Now let's go back to these equity charts. So the question is, what now? Has a bottom been put in here, or is this going to be the potentially the best shorting opportunity of the year? Right now, it's anybody's guess. And here's what I'm looking at. You know, when it comes to trading, the best thing to do is keep things simple. And the safest thing to do is wait for confirmation of a particular move. So now that we've come down to these lows, bounced strongly here, and actually closed near the highs. Obviously, this is either going to come up to test a prior level of support. It could be the lows here from March. It could be the 20-period moving average that it tests. And then there's the potential of it rolling over, taking out these lows and going much lower. Or if we can get above this moving average, then we have a real shot at coming out up and taking out these highs and actually getting back to the highs here at 26.6. Now, at this point, like I said, none of us have a crystal ball, so the easiest thing to do here is mark the lows, mark the highs, and then wait for a breakout from there. Obviously, one day is not a bottom. One day is not a bull market. One day is not a bear market. So, yes, it was one heck of a rally, no question about it. It was significant, and same with the S&P 500, which, by the way, looks very similar to the chart of the Dow. The Nasdaq and the Russell look a little better, but still not a very clear picture. We're still well below that 20-period moving average. It is sloping lower, so we could come up, retest it, and fail, or we can break through. It's always safer to wait for confirmation. There's the Russell. So if tomorrow there's significant follow through here, maybe we got a shot at new highs. But if it quickly fails and turns around, then there's a really a very high chance that we break through those lows. Look, this is all has to do with uncertainty in the markets right now, and this potential of a trade war is really at the top of the news here for the market. So the more information we get from the White House out of these trade talks with China, the more clarity we will get. In the meantime, expect a lot more volatility. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.